Just looking ahead to the key events and themes this week, let's start off with the US dollar. Janet Yellen will be taking centre stage at Jackson Hole. Market participants will be looking out for clues for next moves in monetary policy, but I think any potential dollar bulls waiting in the sidelines there are likely to be disappointed because, as we know, the Federal Reserve already expressed their concerns with where inflation is at the moment, really tracking below their 2% mandated target. And it doesn't look to change anytime soon in terms of CPI then, and market participants and players were really pricing in for at least one more hike before the end of 2017, but that doesn't look to be changing anytime soon, guys. We're only a few months away from the end of the year, so I can't see that happening. So expect the dollar to potentially lose some ground this week, and to add some further fuel to the fire, there are a lot of concerns at the moment politically, as we see, and there's been trouble after trouble, or issue after issue for the Donald Trump administration. We've recently seen the Business Council falling apart there with some resignations. Not good at all. So these cut two things now. So politically and on the monetary policy side of things are weighing on the US dollar, and expect it to lose some ground across the board against its counterparts. Looking over in Europe then, Mr. Super Mario Draghi will also be in the spotlight at the Jackson Hole as players look for any clues for tapering of QE. There was general expectation being built and priced into the market for Draghi to announce the pullback of the large bond buying program at the Jackson Hole meeting. However, we recently saw reports citing sources that there won't be any new policy change announced at Jackson Hole. And we did actually see the euro come off a little bit on the back of that. So at this meeting, we could see Draghi try and talk down the euro slightly, because they did express their concerns within their minutes of their last rate decision, where they're worried about the strength of the euro. But I think with Draghi, he just wants to try and keep it as smooth of a transition as possible in terms of ahead of when he announces the tapering of his QE. He doesn't want to spook and shake the markets too much there on that front. Personally, looking for the euro to remain strong and resilient throughout this trading week. What I would say is pay very close attention, really listen and try and pick out the text that he delivers in terms of for any subtle, because they will be subtle in terms of clues of tapering. Personally looking for them to start to announce that not in September but at the October ECB meeting. So in terms of if we're looking specifically at the currency pair euro dollar, still, guys, it is firm, it is holding above 117, and that north move is still looking to occur. If we look at the chessboard, the ECB are just one move ahead of the Federal Reserve at the moment. Just looking over in Canada then, we do have the country's respective retail sales numbers, where consumer spending is expected to pick up, and we'll continue to see improvement in Canadian data. As we remember, guys, when we saw the Bank of Canada unexpectedly hike rates, we saw dollar CAD tumble, and it was an aggressive path move south, and it did briefly just touch just above 124 before we saw a pullback recently back up to 127. Now it does seem on the path to wanting to go lower again, guys. After on Friday, we saw a pickup in inflation across the board for Canada. If we focus on the month-on-month reading, that coming out of negative territory back to flat, which is good. It's in line with what the Bank of Canada said. They only see temporary factors affecting prices at the moment, keeping them subdued. So this is really good for the Canadian dollar. Really great news. So expect dollar CAD to continue to push lower, guys. Eyes now on 121, where that area is actually subject to another pullback before ultimately we're looking to break 120 and head towards the 119 area. So be aware for retail sales, mark that in your calendars. Lastly, looking over in the UK then, little in the way really of key influencers for the pound this week. We do have the second reading of GDP expected to remain in line, not expecting this to really move the markets as such. There are a couple of things that are weighing on the pound at the moment that I'd say really capping any potential gains for sterling, and I'll mention those. The first one being, the Brexit process at the moment seems a real mess, really disorganised. It does seem to be a lack of progression on that front. And two, the Bank of England's real lack of room to manoeuvre as such to help rebalance the economy. As we know, inflation's still high. There are a lot of economic indicators that are weak at the moment for the economy, which is not good at all. So, you know, those two things are really capping any potential gains for the pound. If we look at sterling against the dollar, I think sterling particularly is going to be a real underperformer across the board. And we could see, if we look on a weekly chart, it does look subject to some further downside. I'm looking at 126 there for cable. So other than that, that's it from me, guys. I hope you have a smashing trading week, and thank you for listening.